You just let me know in the chat. Are we good? What up, chat? Appreciate you guys. I hope everybody had a good weekend, feeling rejuvenated, and your week's off to a good start. I don't really like trade a lot on Mondays. Mondays aren't really my day to trade. Every once in a while I do, but I like to just sit back and watch on Mondays, see how the market responds to over the weekend stuff, and just kind of go from there, looking to see is there anything good to buy. But I don't necessarily trade on Mondays just because everything is usually always so choppy. And everybody who always trades on Mondays, I always watch everybody get smashed. And I just preach it over and over and over. Like, you know, you don't have to trade every day. You could sit out, you could watch for a minute. It's okay to watch and learn and scope shit out. That's what snipers do. They sit on the rooftop, they scope shit out, and when it's ready, they pull the trigger. That's what snipers do. I'm trying to teach y'all to be snipers, man. Um, anyhow, yeah, see, Jay, he got smashed. Got smashed today. What are you doing, Jay? Come on. What are you doing? I've been telling y'all for the longest. Shout out to Billy. Shout out to Billy. Billy's new in the Wealth Squad, but I like his energy. I like his progress. He's trying to learn. He's watching all my videos. He's tapping in. And I appreciate the members who are here who do that. You know, all the Wealth Squad University, there's so many gems in there, and the attrition rate of the amount of membership we have to the people that actually watch the videos and the analytics behind it when we see them, it's atrocious. So shout out to all you guys who show up to these live trainings, not just for me, but to Budget Dog, to Ace, to Wealth Dad. Um, you know, all of these trainings are important, man. And I promise you, you being in here for 2, 3, 4, 5 years, you are going to be a millionaire, man. You will. It's inevitable if you just keep showing up and you keep tapping into the resources that we teach you guys. I promise you, man. It changed my life in a very short period of time. I didn't know shit about options. I barely even traded the stock market. And I changed my whole life in 7 months in the Wealth Squad. I hit six figures in 7 months. And once you hit six figures, your whole account moves exponentially at that point. So y'all can really do some damage in this community if you just apply yourself. So shout out to the 91 of you in here right now. I don't know what the other 20,000 people are doing, but shout out to the 91 of you that are in here trying to learn and trying to get better. Yeah, they're sleeping. They're sleeping. You know what they're going to wake up to tomorrow? The market success going crazy because we're probably going to find a banger trade tonight. That's what's probably going to happen. All right. Enough of the pep talk. Let's get down to business. Let me share my screen with y'all real quick. So for everybody that in here that's been rocking with me, if you're a beginner to the Wealth Squad, every time I do these trainings, I try to do them in a sense that the language is universal, the principles are universal, to where it doesn't matter what level of training you come in to these at what stage of your life, whether you got $100 in your portfolio or whether you got 100,000, it doesn't matter. I really try to teach you guys the things that are applicable to everyone and everybody can use and apply and learn from. So for the most part, this is really just kind of a beginner research tool, or at least a process of how I go about doing the things. You can trade, you can invest purely on technicals of the stock charts. You don't even have to look at a financial statement. You don't even have to look at the company's well-being, but I don't necessarily recommend that. Like, if you're going to invest long-term in these companies, you want to have an understanding of what the company is, what they do, who they're affiliated with, who are their partnerships, do they have any legal troubles? Like, you need to know all of these things if you're going to invest into a company long term, say like Tesla, Apple, whatever. You want to know what's happening within the company. Now, the company isn't the stock and the stock isn't the company. They're sort of separate entities, but they do run hand in hand. There are similarities between the two that are interconnected, but they're also very separated too, in the same sense, if that makes sense. I know it sounds probably confusing and ass backwards, but it's true. Um, but your market research of the companies is going to enable you to sort of connect the dots on these. Um, Somebody reached out. They said they wanted me to look at RTX. I don't know anything really about Raytheon. I've haven't really done like a real deep dive into Raytheon. Um, but just seeing where it's at. So anytime that let's just say you're in your process, right? I use FinViz to analyze the market. Like this is what I do on a daily basis. That I'm here just on the homepage. I'm going to look and see kind of what the heat map is doing. I don't really pay attention to all this stuff over here, the top gainers, the top losers, because this is where the everybody in the market is already looking. This is all the trades that they're taking. I like finding the diamonds in the roughs that nobody's talking about. Those are the trades that I take pride in. Those are the ones that I love to find. But the thing that I do like to go to is all of the insider trades. So this is just a quick process for me. I don't spend a lot of time doing it, and that just comes with repetition. The more you do it, the faster you're going to get, the easier the opportunities are going to be to spot for you. Um, and you're going to be able to find them in a split second, right? So every day, multiple times a day when the market is open. And yes, there's times when I just completely shut off from the market and I don't do anything at all. But I go and look and see what people are buying. And you can already see right here that a whole lot of money is being pumped into ET, energy transfer. Um, right? That was pumped in there on the 21st, which was today. Looks like 3 days ago, 4 days ago. So already right off the bat, I'm going to go look at ET's chart and I'm going to look at where they bought it at, where it's currently sitting. And okay, since that time that they bought it, is the chart been affected by that? Is the chart run up or the rundown affected by whatever activity of this insider? Is that already accounted for? And then I'm going to go into the Wealth Squad chat and I'm going to go and look and see what's happening with energy transfer. Are there any trading ticks that are happening with energy transfer? And if there are any sort of news or a lot of the whales putting money in, it's all going to show up here on the side in this little column with the alerts. You can see just the news portion of it, and obviously you see all the conversations with everybody. But I come here and I scroll and I want to see if there's any of the alerts that pop up for ET, and I don't see any, right? But anyhow, that's that. But let's just say for that instance that we found RTX, right? So we found RTX through whatever else, the screener. And, while we're going to look at that, I'm going to load this screener up just so we can look at some charts. What's happening? Oh, I think I got to log in again. I don't know why everything always kicks me out. Okay. So while all of this stuff is loading, I'm going to jump over here to RTX. So just looking at RTX, anytime that I bring my chart over to stock charts, now stock charts is where I look at the charts in real as a whole. Like I look at the stock charts here usually to see sort of the bigger picture, and then I trade everything. Like I set all of the exact precise levels in TradingView. That's my process. That's how I interchangeably use stock charts and TradingView. If you don't have them both, I would recommend that you do because they're really helpful for your arsenal, but it's not a requirement. As long as you have somewhere that you can look at a stock chart other than Robinhood, it's fine, right? And then as you get more money, as you get the ability to upgrade, you just upgrade. It's totally fine. You don't need all of the fancy bells and whistles when you're doing any of this stuff. Like for me, I don't have 8 setups on my desktop. I don't have 26 screens I look at. Almost 90% of my trades are all done on my smartphone, on my little iPhone in my hand. That's it. I don't use all of the other stuff. But what I wanted to do here is I wanted to pull this chart out some so I could kind of see, for those of you who are familiar with the strategy of the money flow that I talk about a lot too, I pull this out to say 5 years, 10 years, 15 years, whatever that time frame is. I want to just go look at this 10-year chart. because when you zoom out, you can start to see patterns, right? You can see this whole money flow pattern right here as it's just going literally, it's actually really only going in one direction. And now here, from basically right here at 85, it just consolidates sideways, right? It obviously broke out of that, hit this high, which you can basically come down here and, you can connect these if you're, drawing trend lines and everything else, right? Let's just draw this for a second. So you basically take the lowest to the highest points, right? So basically there ish, somewhere around in there. But you also see that here was the peak, right? So if you're doing everything in the past is going to sort of inform the present of where your levels are, right? So this was sort of the peak way back in April. Once it breaks out of this becomes a breakout, right? It runs. So now that you have this breakout, from this breakout, right? It broke out right here, ran up here, got shot down here. The reason I come back this far is because I want to see, like, okay, so it broke this level right here where this high was. But what I really want to know is, was it higher? What's its all time high, right? Was there a level previously way back when where it was at 102? And here on the chart, you see that there wasn't. For this sake of things at the moment. There might be if I take it back further, but I doubt it. Anyhow, you have this level here at 102. So now when it gets above the 102, that's obviously a huge resistance level for that, right? So it's got to break out of that. Anyhow, this is where it's sitting. And now you can see that it's sitting right underneath this. It actually looks like it's not sitting underneath it. It's actually sitting above it. So actually have this a little bit. I want to make this a little bit more accurate here. Right? Okay, so that's a little bit more accurate. Now, you can see on the technical side of this of where it's at. And I know this is a fundamental research portion of it, but you also have to couple in the technical side of it of at least looking at the chart, seeing where it's at, what's the state of it on a technical level. So this is what I'm doing now, is that you're here with this. This is where it peaks at here. This is where it peaked here, where it peaked here, and sort of consolidated right here. And then you see that once it breaks out of this, what happened? It ran up here. Now, if you already set your levels ahead of time, if you're trading this, you would already know that you have resistance levels here, right? All the way across. You can basically set this for yourself of where it consolidates. I'm just trying to do this a little bit more accurately. And then you can set another one basically right here. Now, this one that you set, it's the peak of these candles. And then also here, it's also where these were to the downside. And then what happened? They bounced off of that. And then they were already bouncing up to the top. So you could have basically gotten into this when it broke out of this 85 level, ran it up here to 102, set your level of resistance. You obviously see it goes to the downside. You've set your previous targets here. So you can basically trade this from the top of this all the way down to this resistance level that you've already previously set back here, right? And you can basically follow this whole entire thing, right? And you could see that you'd have to zoom in a little bit to catch this little area of support and resistance, but this area of support here and area of resistance that's right here is where it peaks and consolidates here. So you could have basically taken this from the top, traded it all the way to the bottom, trading options, whatever, or shorting it, however you want to do it. And then saying, oh, well, okay, it's probably going to bounce here off of this support system, which it did, bounced, hit this one, and then it just consolidated, and then it's just played pinball right here, right? But then what happened? You get here, and then it breaks through to the downside. And then it gets here, then what happens? It breaks to the downside. Well, at this point, so the other thing would have been to do is to set a level below this of where this peaked, which I failed to do. I usually do it, but I failed to do it in this example. So given that state of things, setting that level, you can basically Considering we're looking over here, you want to look back here. So you can see that that level becomes basically sort of right in there ish, right? If you take this peak of this candle, you can basically drag this all the way over. The past is going to inform your present, right? So you have this a sort of a bottom of the barrel level below this. And you could see how close these candlesticks got to it. So at this point, when it reached at this point, this is where you set your new level, right? Above this one. And yes, it doesn't really hit any of the other ones in the previous time. Drag this down just a tad. But you can see where it bounced. It sort of tested it, didn't do anything, didn't hit it. And here's the thing, if it gets to a level of support or resistance and it usually hit it, there's usually 3 times that it's going to test it, and usually on the 4th time it's going to run. It's either going to run to the upside or it's going to run to the downside, whichever one, right? That's why you have to just watch the chart. If it's having a hard time breaking to the downside after those 3 times, chances are it's going to bounce and go to the upside, and vice versa. If it's having a tough time breaking the upside on the 3rd time, chances are the 4th time it's going to go to the downside. You can look at almost any chart, any support and resistance, and test that theory, and you'll see it for yourself, right? So you have the 1 taps, the 2 tap, the 3 tap, right? And what happens literally sort of here on this 3rd one going into the 4th one, right? This is basically the 4th phase. The 4th phase is when it breaks out and it runs. It runs for basically $23 over the course of looks roughly like a week and a half ish, right? So that's sort of the analogy of the chart of what's the current state of it, right? So the current state of it, of where it's at, obviously it's just consolidating here, but I think just looking at this, it's probably going to continue to the upside because of how strong this support is right here, of how crunched together those this data is right here. It's not breaking below this support line. And if it doesn't break below the support line, you can anticipate that this is probably going to go to the upside. And whether that means it consolidates for another week or another 2 weeks, maybe it does. But I think you can anticipate here that whether it consolidates for a week or another 2 days, that it's probably going to break to the upside as opposed to breaking below to the downside, right? So that's sort of my technical analysis of the RTX. Now, if you're getting to first of all, does all of that make sense to you guys? Um, just talking about the chart and how I understand it, how I look at it, how I chart the levels. Cool. All right. If you got questions on the reading the charts and things, you can always tag me in the stocks chat. Okay. So that's the technical side of it. Moving on just for an instant to the fundamental side of it. All right. So one of the spots I use is market beat. Everything's just here. This is like, you don't have to pay for this service. If you want to use like the more advanced tools, you can. I use it, but everything's sort of here. Company profile, what they do, talks about their history, their earnings calendar, their target ratings. Everything's, if you've been rocking with me for a long time, you know how much I love things to just be condensed and functional and in one place. I don't like to bounce around everywhere. But there are some things with some of these other sites that it's all based on third party and pulling from algorithms and all these other things. So sometimes it's just to go directly to the source, and you can go directly to the source. You can just use the NASDAQ, or you can go to the company website, whatever that is, right? Let's just go to the company website. RTX. So here's the homepage of the company. Now, when I'm looking at the fundamentals of the company, I'm always going to their homepage to look at it. I want to just have a more in-depth look at who they are and what they're doing. And really what I'm trying to look for on their homepage is like their investor information, their presentations. Do they have any news conferences coming up? Um, I'm going to close out of Market Beat because my computer always runs slow every time I have this site open, but I use this to look at usually all of the stocks. And another thing I like to look at on Market Beat on the fundamental side is the competitors. This isn't entirely accurate. There are a lot of accuracies with it, but I do look at this in terms of just understanding the market that they're in and who are their direct competitors. And anytime that I'm investing in a company or I'm looking at a company's chart that I like, that I think is going to do something, I go and chart all of these other ones too, because chances are if RTX runs, Lockheed Martin's going to run or Boeing's going to run, right? And the other thing is like Raytheon, like what do they do? What do they distribute, right? What are the products they make? Um, and who do they distribute them to? What's the materials they use, right? And if they're making products, say it for airplanes, whatever else, right? What are the materials that they're using to make their products? Cool. You know what they're using. All right. Well, who makes those products? Right? Who's the distributor to Raytheon? These are the questions you should be asking yourself of every company you look at on the stock charts that you have like a vested interest in investing in or trading or holding long term. This is how you get rich. This is how you get wealthy, is by connecting the dots to more than just one company, right? It's sort of killing two birds with one stone with just asking yourself better questions and deeper questions. You got to dig deep past page one of Google. You have to. You can't just stay there and expect all the information to be there, because, like anything, nothing on the surface is going to be given to us. They don't teach you the stock market in schools for a reason, right? Because it keeps people in schools, it keeps them in jobs, it keeps them in careers they hate. Um, Once people start understanding the power of money and how money works, i.e., the stock market and trading options, people start realizing, oh, there's a lot of money to be made in this. Oh, I don't have to go to my shit job anymore. I don't have to go to my career anymore. I can really do this full time. I can make a living of this. I can pump this money into other assets, blah, 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 blah. Right. So you have to go deeper than page one. The real gems are going to be on page 10, 15, 30, 45. Like you have to go deep into your research sometimes, just looking for some of those things. But anyhow, RTX, right? Going for the investor side of it. Some of it's easier to find on other websites. Some of it's a little bit more difficult, but usually there's always an investors section, or it's in like the contacts portion of it. It's usually in those sections, or if it's not in like the upper heading of a company's website, it'll usually be in like their about me, or something like this, the who we are, what we do. It'll usually be in like a drop down menu there. Um, so this is a really important section for you to go to. The investor section is going to have, it's going to have their company financials. It's going to have their earnings reports. It's going to have their upcoming conferences, their any news articles that they're in. It's going to have their presentations that they did at, whatever it was, right? And it's usually always going to have some sort of an outlook of where they're at in their R&D process, their research and development process. It's going to have stuff on their leadership, stuff on their board of directors. It's going to have, you can see they don't have any events coming up. You can listen to their earnings calls of their last webcast back in June and July. You can look at all of their SEC filings, which a lot of the times the thing with the SEC filings is that, take for instance, the insider portion of things, right? For the insider portion of things, you can see that the dates that things were bought isn't the same date that things were reported on their SEC Form 4, which basically says um, what they bought, right? So, let's just go. I'll just take this over here and look at ETs since we were talking about ET earlier, right? So you can see um, the first buy of ET was on August 17th at 12.93, right? For $9 million, 9.6. But it was reported on August 21st at 6:35 after hours, right? So that was, I believe, Thursday, right? So um, Thursday was the 17th, but it wasn't even reported until today in after hours, well after the buy has already happened. Um, I don't know what ET is currently sitting at without pulling up the stock chart, but um, let me look. Yeah, okay, so ET's at 13. Anyhow, not a huge change, but from that day, it's moved up 7 cents. Now, here's the thing, just to understand about how big of a move that is in terms of profits and how fast your money moves. You can do the math on this, right? So from August 21st, or from August 17th to August 21st, this has moved 7 cents, right? $9.6 million went into it. It's only had a 7 cent move. That 7 cents is worth a lot of money for $9.6 million. It's a substantial amount of profits only on a 7 cent move, right? And that's just what I want you guys to understand when you're playing with a lot of money and why you should take these insiders serious, because even though it's a 7 cent move and they banked what they did, they could easily sell that off and affect the whole market, whatever that is. So that's why it's important to understand like how these moves affect things and how to account for them on the charts of did they have a huge run up? Did it account for the 14 million that they put into it? Um, what's the status of that, right? Um, but the thing about the SEC forms is that these are the actual forms that these companies have to fill out. These are 100% proof. You can get all of these from the sec.gov website. It's easier to get on the FinViz because it takes you directly to it, but you can look at all. It's just a little bit more complicated of a website. It's not as sort of easier to read. And maybe I'll do a training on the SEC website for another training on another day. But this is the actual report, right? It tells who bought it, tells the company what relationship they had, the date they bought it, the address of the company. It tells the dates they were bought, the basically the transaction codes, right? Which all have footnotes down here. So you have to pay attention to the footnotes too, because sometimes it's like a rebuy or it's um, a exercise of options, whatever that is, right? But it's going to give you all the information that you need to know here, right? And you can see that is it a direct ownership? Is it indirect? Or is it something else? And you can see whatever the footnotes are, right? Um, when these are reported, when it's bought and when it's reported is usually there's always usually a gap. It's never ever really reported on the same day at the same time there, because for whatever reason, um, I don't know, the processing times, somebody knows something. Um, it's usually always going to be the insiders, the whales get their money first. They take out, they get out of the market, and then they leave all of the retailers holding the bag. That's usually what happens, right? So that's why it's good to stay on top of some of these things. But this is how I use the SEC charts when I'm looking at the fundamental aspect of things of why that buy happened. And so what I'm looking at for ET, for instance, that over the course of 4 days, um, more than almost $30 million, over $30 million has been pumped into Energy Transfer. Now, the question I'm asking is why? What's coming up? What's the company look like? What's the outlook on the chart? Is there a dividend coming up? Is there something in the news? What's the fundamental aspect of things that are happening that might be a indicator of them buying those things. And what I learned about the insider buying, which I talked about in one of the previous trainings, was there's usually a window of 3 to 9 days, sometimes a little longer, of when those ownership or when those insider buys happen, are when the charts start to take off. And it's something that you should always keep your eye on within that window of like 3 to 9 days, or like 12. It usually ends up running to the upside, or falling to the downside, choosing a direction or whatever based on whatever they've done. It's just something to keep your eye on. I've done a lot of research on it. I've looked at the patterns and the trends in the charts in association with when they buy them and how it's affected. And it's just a really it's a fascinating thing. Um, but it's also something that you can use to your advantage to be successful. Following the money and following the insiders and what people are buying or what people are selling is one of the easiest trading strategies in the market. It's one of the easiest things. But you do have to do your due diligence on it. You do have to do your research. You can't just go and follow it blindly. You really should do your research. And so hopefully this helps you with some of that. But coming back to the investor section, right? Click on the events and presentations. This is actually huge. I actually, of all of the things that I look at, I really look at their presentations the most. I don't really pay attention to all their earnings calls and their investor meetings, and I don't really look at all of their financials, because their financials, going to a separate thing, it's like they're the most actionable data, the most relevant data is all going to be compiled into their slide deck of the investor presentations. Let me see if I missed one. RT investor meeting. Yeah. Okay. So they had their investor meeting June 19th. So you can look at the press release, you can look at the webcast, or you can click the presentation. So clicking the presentation, it's all usually going to be in like a PDF format. It's going to be like PDF or PowerPoint. There's a lot of very valuable information in these things. So if you ever look at the investor presentations, don't just skim over them. Like, go through them, but at least the things that are relevant, right? And they're appealing. Some of them are actually fun to read, and it'll send you down a rabbit hole on so many other companies, um, because of the things that they talk about in their investor presentations, or it'll give you new ideas for other companies to invest in that might be affiliated or that might have some sort of a partnership, whatever that is, right? So it's going to run down their agenda. And then you start learning about the industry that they sit in, what's their market capture, what's their niche market, how are they um, how are they moving forward in their R&D plans to accomplish whatever mission statement that they had, right? And then in relationship to that, like, how is their overall market looking, and where do they sit within that at the current state of the market and at its current share price, and where are they going, and say on a short-term basis of say the next year, and then maybe to the next 3 to 5, where are they at, right? So these are all super valuable things. And there are some times when you get to the companies and they haven't updated their presentation from say like last year or the year before that. So that's unfortunate, but they usually um, they usually update their presentations every quarter for the most part, or it's usually like on a yearly basis. They'll do another one, right? It'll usually be like they unveil the new one at the new annual conference that they go to for their space, whatever that is. So spend some time on the investor section of the homepage of the companies that you care about, the companies that you're invested in, the companies that you're thinking about trading, because it can really give you a lot of really good clues in the sense of investing into the company for stock shares, but then also it helps you determine too contracts to buy for options, whether you buy leaps, whether you buy weeklies, whether you buy dailies, whatever that is. It's going to give you an idea of like, okay, well, I read in the investor report that they were going to have this coming up, or they were going to release this product on this day. Okay, so then that means I want to choose an expiration date past November. I don't want to trade it in August because they have November coming up, which is going to be a huge launch of their product. So maybe I'll get contracts for November and just sit on it and then wait for the rest of the market to get to it. And you're already in it, just waiting, right? So these are all things to really think about because they can give you more and more information to be able to make better decisions. And the good thing about looking at all of these presentations is the more you learn about these companies, the more you're going to be versed in the stock market as a whole, and the more dangerous you're going to become because you start picking up on um, a lot of the companies and how they operate and how they move. Like I said, all of these stock charts have personalities and they operate, they move in a certain way. It's the same thing with these companies. Every company has a culture, every company has its personality and the way that they operate within their space, the way that they handle their business. How's their leadership team? How do they go forward and do some of these things? Right. So, those are all really, really good things to take away from these presentations and connect the dots with as you're looking at um, the companies that you want to get into. Another thing outside of the events and presentations that I really suggest all of you do is to have a Twitter account or an X account, right? All right, I'm logged out of that too now. Everything kicks me out. It's only just because I just refreshed all my history. But let's see if this will load. Anyhow, I don't need Twitter to be pulled up to show you guys. I can tell you, but it's going into really just going into the search bar of it and typing in the company itself, the stock symbol, right? The dollar symbol plus the stock ticker, and um, going to latest and look at all the conversations. There's a lot of noise, there's a lot of junk, but going through it and looking at it on Twitter, you can see what people are talking about. And there's a lot of times where there's really good insights and there's really good, hey, there's a lot of inside information that gets released on Twitter purposely. Um, so it's a way for you to stay ahead of the game and a way for you to stay plugged in. When I was producing in television, we always went to Twitter for news. We always went to Twitter for story ideas. Um, Twitter is like the number one news source in the world of how quickly it moves and how things spread so fast. It all starts on Twitter, I promise you, or X, whatever you want to call it. Let me check some of these questions real quick. Does everything make sense for you guys? Y'all good? Place. All right. Let me see. ABBBV. Anthony says, where do we find how much volume is coming in or out during a particular time frame? So, Anthony, you can actually look. There are volume indicators that you can put. You can go to like the indicators. I don't have my trading view pulled up, but you can go to the trading view indicators part and you can just type in volume and it's going to pull up volume indicators. And then for each time frame, the volume is going to be on there. Let's say 6 and KHC are on your watch list. Can you walk us through your thought process entry if you were to come across those charts? Cool. Okay, I could do that. 40 Lock says, are you doing this every night when you find tickers to trade? Uh, Sometimes. right? There are a lot of times where I run the scanner during market hours, say, and a stock comes up, um, and then you don't really have time to do it necessarily. I try to do it on a quick basis to look at things like the more charts you look at, the faster you're going to be able to look at a stock chart in a split second and say, okay, well, that's going to be a good opportunity or not. You can look at the volume, you can look at the support, the resistance in literally 10 seconds and know for sure whether or not it's going to be a opportunity that makes sense for you. And if it does make sense for you, then you can, as you're trading it, you can sort of be doing the research while you're trading it, if that makes sense. Um, it's all sort of a quick process. But a lot of times, like if I see a good company, growing company, or there's some really big news out there, I'll get into the trade and then I'll just swing it. That'll allow me to, if I know it's going to be a good opportunity, it has space to move in the charts, it has decent price targets, then it makes sense for me to swing it, right? Um, Kind of similar with options too. It makes sense for me to swing it if there's room for it to move and there's positive things in terms of momentum that are going to come behind it. It makes sense for me to swing the trade. And if I'm swinging it, then I'm just going to go back. I'm going to take a step back, and I'm going to go and research the company while I'm still in the trade. And then look, as you day traded it, you start to go on about your day. You do the research, and you get more information. You can start to you can take some profits off of your trade if it's ran up significantly. Just say you get into the options trade and in one day it's at, say 45%, and the more research you're doing, the more positive things you're finding. You're like, oh, I want to hold on to this, but I'm up 45%. Well, cool. Take some profits. Take some profits at 45%, keep the rest and swing the rest. Um, if you like it in terms of the research. Um, but yeah, usually like I find the tickers that I find, and then what I do is I write them down on a long watch list, but then I try to narrow it down. I try to narrow it down to like say 5 or 6 that I can watch close. Anything beyond that, it's just so hard. It's so hard to multitask between say 8 to 10 tickers on a watch list, and to look at their charts simultaneously, keep up with your entries, all these things. It becomes very cumbersome and becomes stressful. And really what you want to do is like you really want to protect your peace and make your job easy in the market. So I would really recommend always trimming your watch list to like maybe 4, maybe 6 stocks that you can look at, maybe less. If you're new to the market, I would suggest maybe 1 or 2 and learn those, and then start adding more the more experienced you get. But keep things small, keep things simple. But I try to do this every night. I do, because I think if you want to be great at trading, you want to be great at investing, you have to understand the stock market and the companies that are in it and how they move. And you can't do that by only looking at stock charts. You have to go learn about the companies. You have to learn about their market capture. You have to learn about how the sector that they're in rotates and how the money is distributed within their sector. You have to understand, like, these things are imperative for you to be able to be successful over the long term of the stock market, whether you're trading options or not. Look, Chris hits the plays that he does because Chris knows about these companies. Chris isn't just trading blindly. Crystal's not just trading blindly. Kia's not just trading blindly. I'm not trading blindly. The companies that we get into, before we get into them, I guarantee you, Kia's researching about them. Chris is researching about them. Crystal is researching about them before they ever get into the trade. Or as they're in the trade, they're researching even more. But when they get into the trade, they have a solid, we have a solid baseline of information that we can go off of that's going to give us the conviction to stay in the trade for however long that is, whether it's a day trade, whether it's 30 minutes, whether it's 3 weeks. We have a solid baseline of information that's built fundamentally, coupled with the technical side of the charts too. They run hand in hand. Um, and I know like the strat alleviates a lot of that stuff, but there's been so many times also the strat doesn't necessarily take into consider, and the strat just being, it's just a trading, for people who don't know what that is, it's just a trading style that a lot of the members use for trading options. um, Even for the strat doesn't take into account fundamental data. It's all technicals. If there's things within the charts that I know personally fundamentally that I've connected, I've gotten into trades long before the strat ever got a hold of it. And, my trades were much higher. I made a lot more money than the people who were in it with the strat. But there is some guessing, it's a little more work on my part that the strat takes out of um, that process. So it's all relative to like how you use the tools that you have and the indicators that you have. You have to know what it is you're using and how it benefits you and how it's all connected. Devonta says fairly new at reading charts. I'm a little confused on where to start. Like when you were setting those lines early on RTX, been watching videos learning about double top bottom things like that, moving average, but I think the issue is where to start on chart to put the lines. Yeah. So Devonte, sorry. Um, I will post my trainings in the Wealth Squad after this training for people to tap into. And in the very, very bottom of that Google document is going to be all of my trainings. And from when I first started, and one of those first trainings was chart reading 101 that really talks about support and resistance and drawing those lines. So that's where I would start. I wouldn't focus on the advanced techniques of the patterns and all of that stuff. I would focus on the basic fundamentals, which is support and resistance. Once you understand support and resistance, everything else is going to fall into place. But support and resistance is is what everything else is birthed from, right? Support and resistance is the predecessor to everything else. If you don't understand support and resistance, then you're not going to understand how to even read the stock chart or how to anticipate price action movements. So that's really where you want to tap in at. Trader D, can you go over earning reports, what to look for? I did a previous training 2 weeks ago on earnings reports. That that that'll be on that Google document that I'm going to post after this. Strat, can you explain? Jason, I can't explain the strat to you at all, my friend. That is outside of my jurisdiction. That's all Kia and a lot of the other members in the Wealth Squad. The strat to me is like being in Call of Duty. All right, so let's see, six and KHC. Bobby says, have you given a lesson on Fibonacci for intraday trading? Yes, I did. I believe it's in. I believe it's in my training session for um, the trading indicators. I believe it's part. It's part 3 or part 4. I think it's part 4 for the Fibonacci's. Where do you find the possible trades? I'm going to go over that in a second. So they wanted me to look at Six Flags and wanted me to look at KHC. So I just want to look at this KHC chart real quick. I mean, one of the things with KHC and Six Flags is they're obviously completely different industries, but they kind of have similar charts. Um, okay, so for me, when I'm looking at this for Six Flags, obviously the same thing. Now at this point, I'm gonna get a basic outlook of the chart. I might pull this out for a minute. I'm gonna put this at say 5 years. If there's a lot of activity like this, there's a whole lot of activity, a whole lot of up and down, peak and valley. I'm probably only going to take this about 5 years. But if there's a little bit less, if it's not as apparent, I'm probably going to take it back not as far, or I'll take it back even further if there's less activity. But you can see here when you pull out the stock chart to 5 years, 10 years of how easy it is to read the charts and understanding the money flow, right? So it's basically in that sort of stage one period now, right? It's on the stage four to the decline. Now it's consolidating sideways and it's about to break out above this level here. So it's at 22. Once it breaks out of 25, 26, it's probably going to run its way back to 30. This is where where Six Flags needs to break out, is right here, this 25, 26 level, right? If you're taking this here, trend line, and you're just setting this way back here, pulling this all the way over. That's the breakout point, essentially. Probably drag this down a little bit. I usually drag it down here to like these, the SMA and the EMA where it crosses. That's where I look at, where I try to keep it. But you can see that right here, where this peak is exactly where this peak is, right? It's exactly where this got pushed down. And then what happened when it broke out here? It ran to this side. And then what happened? Where did it run to? Again, the past informs the present, right? And so if you look and see, you can see where the sort of direction changes a little bit of where this is the same, is this is the same. Almost. It's not completely identical, but it's close. And I talk about this in the chart reading all the time, is that you got to look for patterns. You got to look for consistencies and patterns, right? You see that this little area right here, move this up a little bit. See that this little piece right here is kind of the same thing that happened right here. So that becomes an area of interest for me, because when you notice that area of interest, what happened over here? It hit this level. If you didn't have this level before and you're like, oh, cool, it's breaking out. Oh, it's awesome. It's over this. Now it's gonna go up to 45. No, it's not. It's not going to go to 45. Why? Because it didn't get past this level right here. That was an important resistance point, right? Even before that, the next one would be like 30, 33-ish, which it didn't even get there. And then it just consolidates here, just plays ping pong, right? On this support level. So that being said, here, you draw another one right below. You basically call these points of where it bounces, you call them pivot points, right? Set this at the pivot points at the base of these levels, right? You can even take this higher, sort of where these bounce off or when the EMAs cross. And you can see basically right here is the same place of where this bounced to, which was the baseline of where this went to the upside. So again, it's just a matter of piecing it all together and finding the consistencies of it. But if I'm looking at this, it looks like it's on its way up, slowly. Let me look at KHC real quick. And then I'll look, I think somebody said Starbucks. And then for here, again, I want to take this out. Let's just say 5 years. I do this on the charts because it just makes the support and resistance a little bit easier to see on a bigger scale. It's just like with, for instance, SPY, right? Everyone's like, oh, the market's crashing, it's going down, we're all gonna die. Nah, man. If you go and look, this is fascinating to me. Like, this is what I really love. Is like, you look at a 20-year chart on SPY and everyone's like, oh, the recession is coming, the whole market's gonna crash, it's gonna be worse than 2008. Dude, look at this. This is when all that talk was happening. It did absolutely nothing. This little area didn't even phase the market at all. It's just been going up crazy for 20 plus years. So everyone always asks, like, how am I so patient? How am I so positive? Because anytime that I get negative, like I feel like I want to be negative or that, you know, shit's getting crazy, dude, I just come and look at a 20-year chart on SPY. I'm like, oh, everything's going to be okay. It's cool. Nothing's going to happen. It's going to be fine. It's true. Like this chart puts me so at ease of the overall state of the market. All this panic and fear about things being sold off and this company's going under and this company's going bankrupt and all this stuff. Dude, this is the market right here. For 20 years, it's been going up like crazy. And take this back even further. I'm going to take this 25 years. It just puts things into perspective, right? This thing bottomed at $50. It's $439 13 years later. That's crazy to me. That's crazy. You just have to stick to your plan. And even if you invested way back here, right? You draw the trend lines. Is that you even do this? Oh, wait, let me see. I thought I grabbed it. I didn't. Even, wait, why is it over there? I don't know why it's over there. Get rid of this. I don't know why it's let me see what's going on here for a second. All right, it's drawing it really weird. It's drawing it way over there, but that's not where I am. So let me just switch this. Come and switch this around for a second. Right? So then you just take this out and it's only going up the whole entire time. It's it. Right? And if you drew that line, you would have known right here is where it's going to peak. You would have known it. If you can read a stock chart, you can print money, man. And it's just really about connecting the dots, connecting the shapes, and connecting it with the fundamental data of what's happening. Come back to this questions real quick. Ryan said, "Explain your call in Wealth Squad today." I didn't drop a call in the Wealth Squad today, my friend. That wasn't me. That's probably somebody else. Um, what about a big company such as Disney that has been pretty much stagnant for the past 3 months? What indication let you know when there will be a change in direction? Is it to do research and wait for something big to happen with the company? Or, well, so here's the thing, Jason, just like being in the entertainment industry is like you have to look at the state of Disney of where it's at and like what's happening with Disney, what's happening with all these studios, what's happening with the strikes, and how all of these companies and platforms are all going to be affected by all of this stuff. Like, um, when you're looking at that, as long as these things are going on, you can pretty much expect nothing to happen with these companies. Um, they're being heavily scrutinized. They're constantly in the news. The executives are getting trashed. So you have to account for that stuff of why it's consolidating, why it's not doing anything. This whole strike has been going on since uh, early this year, like April. Even before that, yeah, like April, I think is when it started. April, March or April for the writers. The actors joined in like June. So you have to take into account all of those things of like what's the state of the market. What I was saying earlier about the fundamental side of it is what's the state of the niche market that they're in? Where are they at in terms of that capture? Then there was all this news of like Disney being bought out or or sorry, Disney buying somebody out, and so there was that talk. But you have to be able to look at all of that and disseminate what is the relevant info and things that don't really matter. There's similarities of a lot of things. There's redundancies of a lot of things, but for the most part, you have to really look at where they at within the market space, and how is the news or the things that are happening around them affecting their company, right? There are a lot of times where fundamental data will come out, like fundamental news sources will come out with stuff, and it'll be positive, and then the whole stock will tank. And then vice versa, something bad will come out. You would think that it would, like Activision Blizzard, when they had all the sexual harassment stuff and like all of that came out, and the whole stock just ran crazy to the upside, right? You would think that it would go to the downside. So you have to be able to disseminate some of that information as it relates to the stock charts too. But speaking of Disney, can look at it real quick. Shout out to my brother who works there. Um, I'm actually going to take this back 15 years. Yeah, so like Disney's not really doing anything. But if you're buying this, if you understand the money flow, like you could just, this is a perfect opportunity to buy Disney at some point, whenever that is, whether it's 5 years from now, right? You can basically look at it like this. The last time this was at $203 was back in January, right? Yeah. No, April. Disney was at $203 back in April. Well, what happened in April? The strike happened. So it's not surprising that it's went all the way to the downside since then. And it's consolidating here is because all of the stuff they're just getting Disney's getting thrashed in the news. Bob Iger specifically, because of all the things that he said about Hollywood and the creatives and all of those things, right? So I'm not surprised that Disney has went to the downside and it's just stayed there for the duration of all of this. Now, when the strike ends, whenever that is, who knows? Disney's probably going to run again, because even though the strike is happening, Disney's still behind the scenes doing stuff. Disney's not just on a hiatus. Like my brother works at Disney Animation Studios. He's still going to work every day. He's still producing projects. He's still creating, because the thing with these companies in this business is that they have projects for years. It takes years to finish projects. So they're just in post production working on them. They're not creating anything new. They're not releasing anything. All they're doing is catching up on all of the work that's in the can already. So when all of this stuff is over, all of these companies, Netflix, Hulu, Peacock, or sorry, Paramount, Disney, all of these companies are going to run, every single one of them. Because there's going to be a very, very large scale influx of entertainment. Can't necessarily say the quality is going to be good, but but there's going to be a very large influx of productions that come in that are going to launch these companies even further. So once that resolution has been made, but until then, it's probably not going to do anything. But just looking at the Disney chart, and if you're mapping out your levels from the past to the present, you could have just done all of let's see. Right? You can basically look at this level here. I don't know why that does that way over there. I'm so annoyed with technology sometimes. Switch this. Right? You map that out. You could see exactly where the resistance where the breakouts happen, levels it needs to reach, right? So if you do that on the downside too, here it's at 95. So we're looking really kind of right in here of where these levels are. So it's almost right here where sort of right in here. Right where it's currently sitting is boom. Basically right here where this will bounce off and go to the upside, right? So it's like a real channel. Like once Disney breaks out, I mean, you could take this a little bit lower, actually, right? So when Disney breaks out of that level there, is when things will probably start to go crazy for it again. When it gets back above 100. When it gets back above 100, there's probably going to be more activity, right? Ran it here, and then it's probably going to have another activity at about 115. Once it breaks 115, you've got the level up here of say 140 or so. Um, but if you understand the money flow and the four stages that the Godfather Gerald teaches and that I've co-taught with him and that we preach on in the Wealth Squad, is that Disney's just at a stage one. This is a perfect opportunity to just buy Disney and sit on it and wait. That's it. Um, but I do think on the outlook of everything, I think that when this strike ends, the resolution is there. I think that all of these companies that have streaming platforms and have the market capture of the entertainment industry, I think all these companies are going to run. That's just my guess. We'll see if I'm right. I probably will be. Um, when companies do layoffs, is that always a bad look for the stock investors? Because I've seen a company do layoffs and the stock rise. Yeah, Tristan. So that's kind of what I was talking about too, before, was that you get that good news of the company and it tanks, and you get the bad news of the company and then it rises to the upside. So it just um, the way that I look at all of that stuff is like any publicity is good publicity. It's kind of a shitty thing to say, especially when something bad happens, but that's how I like to look at it, is that it just puts eyes on the company. And usually if it puts eyes on the company, everybody's going to look at their stock chart, and everybody who knows how to read a stock chart is going to pour their money into it, to, you know, whether it's options or whether it's shares. So that's part of it too. Um, Now, when you're looking at, say, let's just say a big company, let's just say like Pfizer or Moderna, right? You look at those companies, those are massive companies in terms of market cap, right? That company needs to have a influx of revenue in the billions of dollars before that company's stock ever moves like 10 cents. It needs a very, very large amount of money for it to move in the way that some of these other companies are. So that's also something to think about, is that um, even though there's a lot of volume, it doesn't necessarily mean anything. It's all about the money that's being it does matter in terms of like how much money is being pumped into there. Those big companies like that are going to need to have a lot of money pumped into them before they even move a cent. So if they do get bad news, chances are it's not even going to affect them. It's not even going to affect them. And if it does affect them, they're going to be able to bounce back because they have so much money. Um, One of the other things that I look at fundamentally is how much money does this company have in cash, like liquid cash, right? That also makes a huge difference, because um, people look at the financial statements and they look at where they're at in terms of debt. And sometimes there's cases where the debt is very high, but they have a very high amount of cash. To me, that tells me they have that cash because they have it locked up in other assets that are providing that cash flow, or they have that from whatever entity they've created for themselves to have it, and that cash flow that they're sitting on is used for partnerships. There's probably going to be a buyout somewhere. They're going to put it into a new R&D project. So I really like to look at how much cash they have on hand as it relates to whatever their debt to income ratio is. It matters a lot with a lot of these companies. Um, and just understanding everything that's on a financial statement, it can be deceiving sometimes. You have to dig a little bit deeper than what's printed on the page there. Like, cool, they're in debt by a lot of money. They're on paper, it looks like they're sinking, but in reality is they have their money locked up in debt to a company, say in 3 to 5 years, that come that time, they're going to blow the roof off because of all of the money they've chosen to put all of their money into the debt to be able to launch whatever product that they do, that they're going to benefit from at a later time. So there's more to the financial statements than just those numbers on the page. You have to dig a little deeper into their process as a company and what their company culture is and how they're moving forward with accomplishing what their mission is, if that makes sense. Uh, um, anyhow, y'all, I know I'm over time. I'm the worst at keeping these things at just an hour. If I missed your question tonight, tag me in the Discord. Tag me in the Discord with your question. I'll get to it. I'll try to provide an analysis for you on charts if you wanted me to look at a chart and I didn't get to it. But hopefully, this training has helped you think about some of the questions you should be asking yourself as you're looking at companies and which ones to. Oh, I know what I wanted to do actually before I get out of here. People were saying like, how do I find all of the trades? What I do, right? So I just wanted to go through this screener real quick before this will take probably 5 minutes. Um, this is the one that I always use. Like I gave this to you guys. I told you use this screener multiple times a day, over and over again. Just keep scanning it, keep using it, because you're gonna find banger trades. You will. It's inevitable. I have every time I've used it almost. Um, this is really just looking for stuff to buy that's getting beat up, that's in that 25 to 45 level of the RSI. I might change this to like 30 or 35 if I wanted to go a little bit lower, but um, let me see. What I want to look is the performance today. I want to look at this is today up and see what everything was doing. And open the charts. This is probably one of the scanners that I use the most. That's been super beneficial for me. Zoom in a little bit so you guys can see better. Now I've talked about the process of like what I look for in the charts and all of that. It's in another training, so I'm not going to go over it in this one. I'm just going to look at the charts and see what I see here. See if I find anything. And obviously, like the further down the page you go, the less volume it has, the slower it moves. So I try not to go that deep all the time on the scanners. I kind of stick to like the first 3 or 4 pages, and then anything after that, it doesn't usually move fast enough for me that I want to actually take an interest in it. But what I'm really looking for, somebody asked about Kenview. So Kenview doesn't look like it's even been traded that long. And I don't really mess with like the IPOs and the ones that haven't really been on the market for very long. I think a lot of people get smacked chasing the IPOs, hoping they're going to run up or whatever. Yeah. KVU has only been trading for 4 months, and you can see where it opened and now where it's at. It's basically down $4, $4 or $5 from where it was at before. I don't know a whole lot about this company, but because it's so new, um, I I'm not really going to touch it because there's nothing really to compare it to at this point. Like I'm looking at probably like 6 to 8 months out, maybe a year before I really start to like see where they're at and what their progress is. I just move on. I would just move on from this because you don't know. You don't know where it's going to go. It's like it's so uncertain from right here. It's like, okay, was it going to fall to the downside? Well, the whole trend is to the downside, so it's probably going to keep falling, right? It's very clear what the trend is here on this, but you don't really know. You don't know if it's going to stop. You don't know where it's going to stop. So I don't like to live my life in uncertainty in a certain sense. I do like unknown territory and exploration and all that stuff, but I also like to have a plan in place, especially when it's about my money. Like I like things to be I like there to be a foundation. I don't believe in just like building on quicksand. And getting into IPOs, you're just building on quicksand. Most IPOs within 6 months drop very, very significantly from where they open. So I don't really touch them unless I like really believe in the company. But you have to dig super deep to be able to have that assessment. Anyhow, back to this real quick, and then I'll wrap this up. So Apple, and really what I'm looking for is like just like this, like even for Microsoft, like that's a nice little move for Microsoft. If you got the bread to play with Microsoft options or stocks, like Microsoft is an opportunity I'd probably look at. It's got space to, it's at 321. There's space to move to 340. I'd probably look at Microsoft. But I put this out in the Wealth Squad um, about like what I look for swing trades, that just that profit margin of space to run, like the $4 to $6, $8 to $12, whatever. Like that's what I really look for. It's like even with Apple, Apple has a move too. Apple and Microsoft, they're hand in hand, right? Microsoft runs, Apple's going to run. If Apple runs, Microsoft is going to run. So you basically have resistance at 190 for Apple. It's at 175. That's a lot of room to move. So I would probably look at Apple and Microsoft, at least on this chart, or at least this section of the chart. You got Meta at 289. It's got resistance at 300 ish. I would look at Meta. Mm, grab, plug. Here's actually a one plug. I'm just going to close some of these windows. Mm, actually, plug's a little deceiving to me. I I actually like the plug chart, but I actually kind of want the move to be a little bit bigger. It's at 884, which means it's at nine. It's basically at $9. It has resistance at 10. So it's not a huge move. I would prefer it to be much bigger. Like if you've got the patience, you could basically run this back to 12. Probably take, I think, probably about a month and a half for it to happen. But that's a decent move if you were to scoop up shares. It's, in terms of the money flow, it's like it's bouncing off of this SMA EMA right here and starting its trend to the upside. It's obviously down here in terms of the RSI. Um, so this is also an opportunity, whether you wanted to play shares or you wanted to trade options. Um, I zoomed in too far. Microsoft, SoFi, Meta. And you got Baba. I'm not crazy about the Baba chart, but it is a little interesting in terms of where it's at to where it was. It's at 88, but it's, right around the 90, 95, $98 range of where you could take it back to. It's not a huge move, but PayPal and Snap, Micron. I've been seeing General Motors and Ford on all of my screeners. I like their charts. I like that it looks like they're going to go to the upside. It's going to be a really, really slow move. I really like both of them, but I just don't have the patience for General Motors or Ford. They move way too slow for me. But if you do have patience, I think that there's opportunities in General Motors and Ford to get into trading shares and trading options. It's just a really, really slow move. Yeah, block. SQ looks like an opportunity too, right? That you have this RSI down here. It's at 57. You got resistance right at like 68. So that's a solid move for me. This would be something that I would look into is SQ. I want to go look at this a little bit closer. While that's loading, I'm just look at these questions real quick. Daniel says, "Do you use this mainly to see what is oversold, or are there any other screeners you look at?" Yeah, this is what I look at. Is like if I'm buying something, I want it in that oversold territory of where it's just been beaten down, or it's on its way back up, or it's bouncing. Like this is a good screener to use for that. Billy, this website is not free. You to get the elite version, you have to pay for it. Yeah, I actually like SQ. So right out of the gate, like you could even set a target at 60 short term. If you don't have patience and you just, short term target at 60, you're probably looking at like this. It would, based on where it's at, right? It has an ATR of almost $4 a day. I think, no, it doesn't. I thought my ATR was on here. I don't know what the ATR is on SQ. Um, it looks like on a daily basis, it's probably right around 3.5 to $4 a day for SQ. So that being said, you could set your target at 60 and you'd probably hit this trade and probably, I mean, I'd probably say 4 or 5 days. It'd probably be this week based on where it's going and how it's looking. It's right in this territory where it's on its way up. So um, that's a good move. Your first target at 60, you've got a second target you could put at 65, and you basically got a $3 to $8 per share move in SQ if you got patience. 258 a day. Yeah. So close, like roughly $3 almost. Um, Snap, there's gold. And that's really what I'm looking for. I'm looking for like just that little bit of an uptick in the green or the downtick in the red. Obviously, if you're going to the downside to short things or to trade puts, but that's what I'm looking for in that move. And as like right away, like as I'm scrolling this fast, but right away, I just know that that's an opportunity. It's a pretty wide gap. And you know how I feel about trading gaps, right? You just have to have the patience to sit on them. Um, and look, a lot of the charts that you look at and you scan are going to be trash. There's not going to, not every thing that you look at is going to be an opportunity. Um, Looking at coin, right? I'm looking at coin here because it's at 75 and I see that there's a little bit of resistance here of where this consolidates at like 80. So that's a $5 move. That's an opportunity for me. So again, look, we've talked about Apple, we've talked about Microsoft, we've talked about Disney, we've talked about what else we talk you what else we talk about? We just talked about I totally had a brain fart. Um Coin. It's like 10 trades. 10 trades, man, that you can look into. Yeah. I actually like coin. See where it's sitting right here? About to bounce. It's at 75. You got a short-term target at 80-ish, right? You could take it up higher here for a secondary at like 84, 85, right? Once it breaks this, what happens? Boom. That happens. Chances are it probably does it again because if you look, it basically did it every time. Did it here, it did it here, it did it here. So my guess is that if it breaks that 84.27-ish spot, probably does it again. But that's a nice little move. That's almost $10. Almost a $10 move on coin that's just waiting. And it's already up $2 today. So chances are it's probably going to continue that trend. Oh, SQ, that's right. Duh. Trading platform I use TradingView. I don't have it open because I forgot my damn password when I reset my settings. So SQ, even shop. Shop has like a $7 move. It's at 53. It's got resistance at 60. You got a $7 move in shop. That's something I would put on the radar. And it looks like it's sort of on its way up for Shopify. It's sitting in that beat up territory. All of these are going to be opportunities right now. Whether they hit tomorrow, whether they hit in 3 days, whether they hit in a week, they're all at levels that you can actually make money, right? Really, you have resistance beyond before 60. You got it about 56. So at 56, you got roughly a $3 move to 56. And at 56, you set that. What happens? That happens. It goes to the upside if it were to bounce right there, right? Because that's the same exact level almost of where that bounced back to the upside. You really take it from right here of where this sentiment shift of where this ended and where this started is where you put it. So basically 57. So you got a $4 move. $4 move, $4 target to 57. You set another one at 60. Shop becomes an opportunity too. Anyhow, that's what I see, y'all. That's how I look at it. That's how I analyze it. I don't overanalyze it. You have to have the confidence in what you're doing here in the trainings and what you're looking at in the videos and testing your theories and reading charts. If there's anything that I could recommend to you guys, it would be to pour all of your time and your energy and your effort into understanding how to read a stock chart. That's it. Like, if you understand how to read a stock chart, you are going to be lethal in the stock market. You're going to be able to spot opportunities in 30 seconds in the same way that I just cranked out like 8 to 10 trades. Put in the time, put in the effort to learn the charts. It's like once you have the knowledge, nobody can take it away from you. You have it for life, and it's gonna save your life. There's like we all go through hard times, and the crazy thing about that is we all go through hard times. We all have these little periods of chaos in our lives, but the one thing that's true about that situation is that as long as you can read a stock chart, you'll never ever be broke, ever. You will never ever be broke again if you can understand a stock chart and you can execute on how to trade or invest. You'll never ever be broke, ever. Like, understand that, feel that in your bones, man, feel that in your DNA. You won't. There's so much opportunity every day in the stock market if you just put in the work to learn the stuff that's going to help you. Um, Anyhow, y'all, I appreciate you guys sticking with me over time and tapping in with me always in the Wealth Squad. I really appreciate it. I don't take my position here as a provider lightly. I don't take it for granted. I'm super grateful that you guys have me in the squad and you advocate for me and you support me. I want to help lead you guys to the time freedom that you desire, and I want to see your growth and be able to pass it on to the next person and teach them what somebody taught you and help change their life, right? That's why we're here. That's why this community is so strong. The Wealth Squad is bigger than the stock market, right? It's a real family here. So I just appreciate you guys tapping in with me all the time. Like I said, if you got questions, tag me in the chats. Happy to answer them. And I'll see you in the Discord. Have a good night, y'all.